Hello, fellow investors, and welcome back to Borex Investing. So today we're going to be talking about Nebius and all the recent news that is getting its investors very excited and bullish as we get closer to the Q3 earnings call. So I was actually away last week on vacation, but even while traveling, I kept up with all the market news, and wow, what a week it was. So the biggest news of the week was that the stock hit a new all-time high of $141 right before the China tariff sell-off hit the markets on Friday afternoon. But in today's video, I'll actually cover all the major Nebius-related news events from last week, including the Oracle rumor that caused a sector-wide pullback, Microsoft's recent capacity news, the upcoming ClickHouse IPO and what it could mean for Nebius, the latest updated price targets, and finally my take on the broader market sell-off after Trump's latest China tariff comments and kind of what it means for Nebius investors and how you should really look at this going forward, just in case these kind of tariff talks escalate again. But before we start, I need to disclose that I am very bullish on Nebius, but I am biased as a shareholder that's sitting on over 1,200 shares, which were primarily purchased in the first half of 2025. And I also have aggressive call options with a $145 strike price for March of 2026. All right, so let's start with what caused the AI infrastructure sell-off early last week. A report from The Information claimed that Oracle lost nearly $100 million renting out NVIDIA's new Blackwell GPUs last quarter. This headline instantly hit every single AI infrastructure stock, including Nebius, and caused a quick sell-off across the board. But within hours, Fox Business reported that the story just didn't add up. The numbers looked off, and there was no evidence to support that kind of loss. And Nebius shares almost began recovering immediately. And honestly, even if that story was true, it wouldn't really even apply to Nebius at all. Nebius has gross margins above 71%, and the demand for their GPU compute far exceeds supply. So they don't even have an Oracle problem, they have the opposite problem. They can't build fast enough to meet demand. So again, this really gave investors a quick gift to buy the stock on a discount while it lasted. And then oddly, right after that recovery, we got some major news from Microsoft. According to multiple reports, Microsoft is turning away Azure customers because they simply don't have enough capacity and may not until 2026. That's insane when you think about it. Microsoft is spending over $80 billion in capex this year, mostly on data centers and AI infrastructure, and still can't keep up. This is exactly why their $19.4 billion partnership with Nebius matters so much. Microsoft needs access to GPU power, and Nebius provides it. Nebius is selling compute power at record prices right now, and this capacity crunch only strengthens their position. So as Dan Ives put it recently, we're still in the early stages of the AI revolution, and the boom is nowhere near over. So this was a major AI headline last week and really sent the stock to all-time highs when it was trading above $140 for the first time. So again, very bullish news from Microsoft. Another piece of big news that flew under the radar last week was related to ClickHouse, the Nebius sub. So ClickHouse, one of the fastest growing data analytics platforms, just extended its Series C round and added new leadership ahead of an expected IPO. So the company now has over 2,000 customers and quadrupled ARR in the past year with huge clients like Anthropic, Meta, Tesla, and more. If ClickHouse does go public with a $30 billion valuation, which is possible, Nebius's 28% stake could be worth at around $10 billion on its own. So that's huge, and it's a reminder that Nebius isn't just about compute power, they also have valuable assets across the AI ecosystem. Also, Nebius recently announced a partnership with TD SYNNEX, one of the largest IT distributors in the world. This will only help expand their reach to enterprise clients across more markets, and it's just another step in scaling their operations. So like I said, there was just so much positive news last week, and you could really see it in the stock price. All right, next up are the price targets. So we saw one update in the last week, and it was rather interesting since it came from Goldman Sachs. So I covered this before, but Goldman Sachs tends to give very conservative price targets. When they initially gave Nebius a $120 price target only 1 month ago, it was considered aggressive as Nebius was trading in the $100 range. So early last week, they went ahead and issued a new price target at $137. So that's just about where we're trading at right now. But remember, they released this when Nebius was trading at $118. So Goldman actually went a little more in detail this time and provided a full report where they go over the bear, the base, and the bull cases. So Goldman called their model conservative, which is pretty interesting considering their base case is right where the stock is trading at right now, and their bull case basically doubles it with a price of $283 per share. So that should give investors confidence that the street is taking Nebius seriously. I was personally surprised that Goldman gave such an aggressive bull case scenario, but it's something I love to see as a shareholder, and I do hope we do reach these levels sooner than later. And then to close off last week, the market really took a pretty sharp hit on Friday. The Nasdaq dropped about 3% after President Trump reintroduced tariff talks against China. Nebius fell from $140 all the way down to $122 in after-hours trading before bouncing back. So since then, Trump has kind of de-escalated, but I just wanted to make one major point here. In my opinion, this sell-off was a complete overreaction. Nebius has minimal exposure to China. They're a European company listed on the US Nasdaq, operating data centers in Europe and the United States, serving clients primarily in those regions. I mean, sure, they might source some materials from China for data center construction, but they're not dependent on Chinese customers or manufacturing. So for me, this was just a buying opportunity during a market overreaction. And as of today, the stock has already rebounded back to the $135 range. So where do we stand now? Well, last week's panic around Oracle turned out to be a non-event. Microsoft's capacity shortage actually reinforces the bullish case for Nebius, and ClickHouse is really setting up for a potentially massive IPO. All things considered, Nebius continues to execute perfectly in one of the strongest AI infrastructure markets we've ever seen. I'm obviously still holding all my shares and my call options, and I remain just as confident as ever that this stock can reach $200 by mid-2026. In the short term, I made a call in my last video that this would push towards $150 heading into earnings, and we still have a few weeks to go, so I still see that playing out. I mean, we're already at $141, so we're not far off. So I'm still bullish, and I'm still looking forward to the next month. Anyways, that's it for now. If you found this breakdown helpful, please make sure to like, comment, and subscribe. Let me know your thoughts. Did you buy the dip on Friday, and where do you see this being priced as we head into earnings? As always, thanks for watching, and I'll see you next time.